Good morning, traders. It is 8:01 a.m. Chicago time on Tuesday, the 10th of November, 2015. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance not indicative of future results. I probably should record that and just play it back. Um, this morning, the only news items that I see of relevance that is the China um, inflation numbers. China faces deflation pressures. China's consumer prices climbed by just 1.3% year over year, which was much slower than a 1.6% pace in September and the 1.5% expected by economists. So the forecast was for 1.5%, and they got 1.3%. So it's still what that tells us is that there's still a high probability of more intervention by the People's Bank of China. At 7:30 Central, just a half hour ago, October import price index came out at negative 0.5% versus negative 0.1% year on year, negative 10.5% versus negative 9.4% expected. Looking ahead at today's calendar, at 9 o'clock Central, 10 Eastern, we have U.S. wholesale inventories expecting 0.1%. Trade sales also expecting 0.1%. And then as far as speakers, we have at 10 o'clock Central, 11 Eastern, U.S. speakers Bloom and Regling at the Parliament panel. There's some stuff going on with Greece. Greece is unable to persuade its creditors to release bailout funds. I'm not sure if this is something that's going to play out onto the market, like we saw late spring, early summer with Greece last year. Greece failed to convince European creditors Monday to release vital bailout funds to shore up the country's public coffers and its crippled banks, but hopes are high that a deal will be concluded within the week. And that same EU speaker today, Bloom, said that there are open issues with Greece that need to be resolved. Other than that, there really isn't anything else. Let's look at what's on. Let's see, what else is there? Looks like Fed Speaker Evans after the market today at 4:15 Central, 5:15 Eastern. Let's look at what happened yesterday. What an interesting day yesterday. So, yesterday, the main, for those of you who attended the Trader Bite, the primary, the primary trade idea was for responsive buying and an eventual attack on that 96 quarter and up to 97 half. That was the expected response, and the reason is that if we look at what we have done here with this double distribution, there's the 97 half here, 97 quarter is the key area above. The expectation is we were right in this dividing line right here at the MCLVN, and with a gap lower, and the expectation is that it would likely test higher and clear out this week. This is a very noisy chart. Let's clean it up here. So test out this weak, take out this weak ledge of volume here, and a weak high that was left behind yesterday. That was a primary trade idea, or the primary hypo of the day. It did not get any play at all. Instead, the market opened, pushed up, and then basically went into a trend straight down into the targets below, which are hypo, which was hypo 2. The target below is 64.75, 69.75 to 64.75. Essentially, what yesterday did was to drop into this lower distribution right here, and then fall back into the FOMC range, which is right there. The FOMC range being 79 down to 61.50. The low yesterday was 62. We were unable, even on the rally in the afternoon, we were unable to recover um, in back into the MCV here at 80.50. So overall, a pretty weak market, pretty aggressive selling. However, despite the trend, note that the delta wasn't all there. With this sort of a trend here, on this day, we had 26 points of range, 26 points of range, and the movement on the way down had very few counter rotations. The only time I saw a legitimate setup for me to get short was on the retest of 77.50. Was not on that. Completely missed a sell-off yesterday. It is what it is. But on a day like yesterday, you would expect the delta to be in the negative 35 to 40,000, which is more of a trending delta. There was you would expect some pretty aggressive selling on the bid, and we just didn't see that yesterday. The market traded in a very zigzaggy way when it comes to how aggressive the sellers were versus the buyers. A very strong push up near the close on a really strong delta. You can see this bar, this delta momentum bar just popping up on its own. It looked to me like prices down here were considered cheap. The overnight low is at 65, which is in line with this area where we saw support. We saw some pretty aggressive buying in these areas once it got down there. If I switch back to my trigger chart, you could see that there's a pretty good taper on the low. This is a very orderly sell-off. Very nice taper on the low. This taper here in volume shows that as price moved lower towards the Fed day low, there was less and less and less interest in participating. And overall, you could see as price went down, the delta was moving up in this area. There's definitely some pretty good. Yesterday there was some really good buying interest here at the low, and then we saw it again overnight. That's why we have that 65.50 overnight low. Let's take a quick look at that. So overall, I'm very interested in that area to see what kind of liquidity is available in that region for an opportunity to buy back up. As we, this is just a pullback in the trend, but you can see here again a rapid taper, an orderly taper on prices as the market auctioned lower. So I'm watching the 65 area very carefully today. We're trading the 69, 68.75 right now. The overnight profile showing potential long liquidation. There's a lot going on at the lower end of the profile. The NASDAQ profile looks even worse than that. The NASDAQ profile looks like it is likely to push lower early versus what the S&P is doing. So if we look at a 24-hour NASDAQ chart, pretty seriously difficult profile here. You have multiple distributions, and then you have a very large distribution down near the low, and the market has had an impulsive move down, what looks like a continuation move, but it's not able to get any participation on the buy side yet. There's a pretty good excess low, it looks like, on the overnight, but again, this is the overnight. It's hard to trust. We can't trust what the overnight's doing, since the underlying stocks, the equities underlying the index. Remember, we're not trading in a vacuum. We're trading a product that has an underlying index. The underlying stocks are not there, so we're not able to see what what kind of real participation there is. But overall, this looks like a secondary impulsive move, pullback, and a continuation lower is more likely in the NQ, at least for a test of that 46.2450. So conflicting conflicting positions between the two markets. I never trade one market off the other, but overall, we're opening inside of yesterday's range, inside of yesterday's value on what was a lower low, lower high, both on price and VPOC, which reminds me, I wanted to share this chart with you. This is an important chart for me. What this is it's the VPOC shift chart. This is a chart that shows us what the VPOC is. Now, just as a reminder, VPOC is the volume point of control. It is what statistically is known as the mode, or the highest, the number or price that had the highest number of contracts or the highest participation. That's what VPOC is. In other words, it is the number at which the most trading by volume occurred. Okay, and you could see that we had, some pretty decent balance days. Then we have a breakout day, a follow-up day, a pullback day. Then we rotate up, another set of balance days. This is where we ended up pulling our point of control yesterday at 64 from here. And then the market has been tiptoeing its way down. You could see these points of control just stair-stepping down with a big step down yesterday. The green lines are the high of that day and the low of that day. And all we're doing is we're comparing how the highs and how the price action is versus the point of control. And the market's basically accepting lower and lower prices currently. This is quite normal for a pullback. I'm not seeing any reason this should not be considered just a normal pullback. The market has pushed quite a bit up near the all-time highs, and like I stated last week, we are likely to start advertising lower prices to bring in more buying participation. And that's what the market does. The market is very simply an auction. It is nothing other than that. It is not a mechanism for stealing your money, for ripping you off, for gunning your stops, for those things do not make sense to me at all. And I've been doing this for a little under 16 years now, 15 years plus. And if you look at the market for what it is just a mechanism for discovering where participants want to trade the most, where we can get the most buyers and sellers to participate. That's the goal of the market. This is why people bring their stuff to the flea market, and this is why shoppers go to the flea market to buy things. The point of the flea market is to bring those buyers and sellers together and get them to participate. And that's what the exchange is all about, and that's what trading is all about. So don't get lost in the mathematics of trading. The mathematics are meaningful, but you must understand how the auction works and why the auction works the way it does. And what the market has been doing is it's been auctioning lower and basically asking participants, is this low enough? Is this low enough? Is this low enough? Oh, we found our buyer. Here's the pop, the pullback, and the push. And that's what we're expecting next. We're expecting it to continue to participate on the downside until prices are low enough to make sense for participants to push in, or for the stronger participants to push into the market and start buying it up. That's why markets do not continue higher forever. They're eventually going to find sellers. Those buyers that came in earlier are going to become sellers at a certain price, and when they do, the market turns over, and it does exactly what you see here, where the point of control just slowly shifts down. And since it had accelerated yesterday, the expectation is that it would decelerate today and possibly reverse over the next couple of days. We have some, Thursday, Friday, we have some important releases. We have Fed speakers. We have like 6 Fed speakers on Thursday. So we expect some participation some volatility to come in, and I expect it to pop up over the next few days as it has done a good job of auctioning lower. So, where am I interested in this chart? I'm interested in things where the market makes a higher high with a lower point of control, like this day here. This day doesn't really qualify very well because it's a double distribution with almost equal volume at the high and the low. But when the market makes a higher high and then it has a point of control that is lower, it says caution over the next couple of days. It basically says the market's likely to go into balance. There's some conflict there. As prices go higher, you'll find more and more participants in the opposite direction, in this case, sellers. So you can see sellers balance this market out for 2 days and broke it lower the third day, and then it had its pullback, and now you have the point of control in line with where we were before. So this is what this chart is all about. I felt like it was important to share it. Overall, today we're looking for the market to open in value, in range, in value. It's opening up against the point of control. The only response I can come up with right now, because of the situation that we're in here, is responsive buyers back into the point of control from yesterday at 74 and a quarter, and then to start moving back up into this micro composite. So today, like yesterday, the expectation was to move higher. Here's the thing with yesterday. If the stronger hypothesis is to move higher and the market doesn't do that, it's not a to me, it is not a terrible thing. It's not a mistake, so to speak. It's not an issue, because what that says is if all things are, if the greater number of things are pointing to a higher push on the open, yet the market stays offered, and then you see sellers come in and smack it. This is a huge opportunity. It's a better opportunity on the short side than it is on the long side as it's happening, because you are likely to get more people who are caught long or trying to buy it throughout the day than sell it, because the obvious answer is the one that everybody's trading for. So yesterday, very clearly, the expectation was for this point of control to be taken out, and for us to return back to that 97 quarter area. And when it doesn't do that, it's what I call the Monty Hall puzzle, the Monty Hall problem. You should just look that up. It's just it gives you a much better opportunity on the other side. I like this sort of thing. Again, yesterday I just wasn't sharp enough to get on this short side at a decent place. Just didn't participate in it. But if today has the same answer, if today, which again, because we have our point of control higher right there, and by the way, the overnight inventory is completely balanced. It's flat. So it could go either way. The expectation is if it's not able to go up to the 74 and a quarter, and it just has a hard time pushing up, and the rotations are larger, the rotations up are small, the rotations down are larger, then this creates a really good opportunity for us to visit that 70-50 area below, which is another key area to test before what did I say? The 2050 below, the 2049.75. 2050 below, and then 2045 and a quarter. It just gives you a nice big target to shoot for, about 15 points or so once you get in. So don't be closed-minded about what you expect the market to do. Don't impose what you want it to do onto the market. Just be flexible enough to know that, hey, if it does not participate the way I expect it to, then I'm looking for it to to go the other way, and it gives me a better opportunity that it goes the other way. I would caution shorts though. The area to watch out for, the over/under area, is this 2065. you got to watch, if I do participate on the short side, I'm going to look for a bounce up and weakness before I get short to break through. But I expect it to bounce up off of this 2065 early on. I've gone way over my time explaining all this stuff. I'm going to let you go. I want to remind you again, there's a Convergence Tuesday event today about stocking, reading order flow, and stocking trades, trade stocking techniques. I did say it was real time yesterday. That's not true because I'm doing it after the market closes. The second part of this Convergence event will be in real time. It'll probably be later in the morning in a future session, probably in the next week or so, so you can see it live on a real-time trade rather than theory and rerunning playback. But today we're going to get familiar with the ideas and get you looking at how order flow, historic order flow plays with prices. I think it'll be very fascinating for you, and I expect that you'll get something important out of it. To get the link for that, it's connected to this video. It's in the description of this YouTube video, the stream that you're watching. It's also on Twitter. It's set to post it on a schedule. You can grab it there. I really suggest that you register for it, as it might open up your eyes a little bit about order flow and how that works. Good luck today, and I'll catch you tomorrow. Take care. Or I'll catch you this afternoon. Take care.